Hey, welcome back to the Mining Pod. On today's show, we're joined by Pennyether. He's one of Twitter's favorite public mining analysts out there. He covers a few major miners, and we go through basically his framework for how he thinks about Bitcoin mining and how he values different Bitcoin miners. So we go from first principles of just what is Bitcoin mining in essence as a business, and we go all the way through how these stocks perform, why they perform in certain ways, and then also how these banking analysts are thinking of things. This is honestly one of my favorite shows of the year I've done to date. Thank you for Penny to make this possible, and thank you to Pubkey who allowed us to film on location. Okay, a quick word from our sponsors and then on to the show. Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Thanks for listening to The Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today. Penny, first in-person podcast. Not your first podcast, but first in-person. We got the beers. We're at Pubkey. It's Friday afternoon. Bitcoin's at 100K. We got some new analyst reports for Bitcoin miners. I think you and I are going to have a fun time.
It should be fun, yeah.
Should be a good time. But
happy to be here.
Yeah, thank you for joining the show.
Thank you for having me.
Yeah. So much to discuss this week. I think when we were first talking about doing the show, well, we've been talking for 6 to 12 months about doing stuff together. And the thing that's always stood out to me is like your remarkable growth in learning metrics in Bitcoin mining so quickly. And then now like your ability to communicate them to people. And so that's why I want to do today's show, because we're on CoinDesk, but we also have like a lot of institutional investors. Like I was going through our newsletter the other day, and there's just tons of people who work in the industry, who work at banks, who are at these analyst shops, paying attention to what we do. And I think that's why you're the best guest, because you're going to be able to talk to both sides of the spectrum, like the CoinDesk listener who doesn't understand Bitcoin or Bitcoin mining, and then also the banking analyst. So you have a big task ahead of you. And today I want to talk about these Bitcoin mining metrics that you're so good at understanding. If you feel ready to do it.
Yeah, sure.
Okay, let's dig in. So the JP Morgan report came out. They do it's monthly, right? With Reggie and them.
I don't get it.
Yeah.
I'm not one of the English clients.
How many?
I saw the latest one.
How many assets in our management do you have to get that?
I don't know.
Yeah, probably
more
a lot.
than what I have.
Don't say that. I'm sure you're doing fine. It was an interesting report. They only cover 5 different Bitcoin miners, and you cover 5, but
I cover 8.
You cover 8 now.
Well, it's not the same coverage as theirs, because they have to like officially cover them and keep track of every little thing. But for the purposes of like keeping mining metrics and what I actually keep track of, it's 8 right now.
Okay.
It's not too hard to add more, but it's just more work.
Who are the miners that you cover?
In alphabetical order, I think it's Bitfarms, CleanSpark, Cores, Cypher. It's not alphabetical, but
yeah, close.
Mara, Riot, Wolf, and Iron. Totally not alphabetical.
Okay, and JP Morgan is Iron, Cypher, CleanSpark, Marathon, and Riot. So the bigger caps. Cypher was a smaller cap and then became interesting this year. Why did they pick him up? Do you remember?
When? No
why
idea.
or when?
Oh, why or when? No.
I should ask Reggie that. Cool. Let's go through these things. Like mining metrics that matter is kind of what I'm putting in my head for this show. And I think like the best place to start with that is when you were entering the space, what kind of metrics did you pick up on that were?
So when you first enter the space, the thing you see the most as a complete layman is cost per Bitcoin. And so that's the first thing I looked at, and I was like, okay, what does this mean? And then I was like, well, how is it calculated? And then sort of like, well, but they produce less Bitcoin every month as network difficulty goes up. So is it really a good metric to use? Because there's an extrinsic force to it, like the network hash rate and transaction fees if they go up or down. So is that really the best way to measure it? It's sort of nice to say, okay, for that period it cost them this amount per Bitcoin and they mined this many Bitcoin. So it's easy to see how much money they made. Okay, that makes sense. But going forward, it's not really like a static metric at all. It's sort of the all-encompassing metric that takes into account too many factors, in my opinion, to be useful. And then I don't know when hash price index started, but I looked at that and I was like, okay, why does this index exist and what is it? This is back when I was like completely new.
So how long ago was that? Not
in terms of like equity analysis and like Bitcoin mining going really deep. It's about a year and a quarter or so. But I had looked at miners back in like 2019 and 2020, but not completely unaware of like all the other. I don't know if hash price index existed back then, but I was using a different thing. Like I was doing cost per terahash, not per terahash per second per day.
Yeah.
So they end up being the same unit, just multiplied by some factor of like number of seconds in a day or something like that.
And there was 20 less public companies at the time. It was Marathon, Riot.
It was mostly Marathon and Riot, and Canaan was the manufacturer of stock, and I think there were some others that were I think maybe Bitfarms was around back then. I'm not sure.
I think Bitfarms, like the Canadian companies, but I don't think they had like the NASDAQ bridge or however it works. Maybe they did at the time. Almost irrelevant. Okay, but
so
you have that
hash price.
Hash price.
So modern Pennyether is like, okay, understands hash price now. Like, oh, that totally makes sense.
Yeah.
If you have just some fixed hash rate, it doesn't even matter what the efficiency is or what you're paying for it or whatever. What's the revenue you get? I think it should be called hash rev, like hash revenue, but it's called hash price.
Yeah.
Just, I guess, because there's a market on both sides is what Luxor wants. But if you think of it as hash revenue, it's like if you have some hash rate, that's work. It's the same work that's in proof of work. It's the same thing. Hash rate is proof of work. If you have some rate of doing work, how much do you get paid for it at the current time? And to me, that's very intuitive and like one of the best ways to think about it in terms of just what's the conversion between doing work and getting Bitcoin. If you go the next level, like one level deeper, where you say, okay, what's the hash? There's not a word for it. Kilowatt rev.
Yeah.
What's the revenue you make per kilowatt hour of a specific miner?
Yeah.
So that's interesting. So, if you have 1 kilowatt and you're mining with that, how much do you make from that? So to convert from kilowatts to hash rate, you need the efficiency. So that's the conversion. So there's like a middleman between like your energy and converting it to work. The middleman is the ASIC. So you have, 1 kilowatt. And then if you put 15 joules per terahash on top of that, you get 15 terahash a second. I think that, or maybe it's the inverse. I gotta check my mental math. But
no one's checking here. No fact checks on the show.
That's the conversion rate.
Yeah.
It is the inverse. So you do 1,000 divided by 15, like 1,000 watts divided by 15 joules a terahash. That's how many terahash you're going to get. Yeah. So as your joules per terahash goes up, you get less terahash per kilowatt. So that's the way I think about it. Is the base level is like your energy. Then you slap in your conversion rate, which is the joules per terahash, and then you get your hash rate. And then you look at hash price to see how much is that worth, how much revenue will that make you? And then when you start to think about it deeper, you're like, okay, what do these ASICs cost? And when do I break even on the investment I made to buy that ASIC?
Yeah.
So the ASIC is sort of just like a money printing unit, but you have to pay up front for it. And hopefully you get your money back from running it for a long time.
Yeah.
And the ultimate determinant of that is, Bitcoin has a relatively fixed issuance, like the subsidy is the same and the block time is roughly the same. Every 10 minutes, it gets adjusted. And transaction fees are, they spike and they go up and down, but generally they're like sort of a flat amount and it's not much compared to the subsidy. So you know how many Bitcoin you're going to make per month for a hash rate. I lost my train of thought, but
no. I think you're like getting to something I wanted to talk about, which was like the basics for this network for people who don't understand it. And you're kind of laying it out here where, you have your ASIC as your middleman between like energy and turning into money, monetizing things, right? So the structure for that has evolved over the years, right? Where it's like these private companies that hobbyists were mining Bitcoin ASICs. And then we had Bitmain come along and start industrializing this. And then we had our first public companies pop up. And then 2021 bull market, we had a few IPOs. We had some other things occur, some SPACs. Most people made it, few people didn't. And now we have like this class of Bitcoin miners, and we almost have like this banking industrial complex with Bitcoin miners.
Absolutely.
That
they make a lot of money for a lot of people.
They make a lot of money for a lot of people. A lot of these executives have very nice houses now for being a part of Bitcoin mining early. And the question for everyone who is not part of that complex is, do they deserve it? And did they take advantage of the misunderstandings of how Bitcoin mining works? And I think there is both a yes and a no to that answer. And I think that's some of the most interesting work that you've done in your Twitter threads is break down how a miner, and I won't use an example here because I'm not going to take a shot at anybody, but how a miner can use its metrics or use its information to its advantage when the rest of the industry is so confused on these things. So I think that's where I want to go with the conversation. Let's keep going along with like the metrics that you started learning more about.
Sure.
So we have hash price, aka hash rev, in your mind. What were some other ones that you kind of started learning about?
I mean, the equation is you take your kilowatts times your efficiency of the ASICs, and you get your hash rate, and then the hash price tells you how much you make for that hash rate.
Yeah.
Now, if you want to look at the general trends of things, like you were saying early on, there were hobbyist miners, and early miners it was super profitable back then. So one thing I tried to do to study is sort of, let's try to, instead of having some fixed joules per terahash conversion, let's just use like whatever ASIC was the best one at that day.
Mm-hmm.
So like in 2013, if you had a kilowatt and you were running the best ASIC, you got some hash rate and you got some revenue. There was some hash price for that time.
Yeah.
And sort of how does that trend over time? Like if you're mining with the best ASIC, what happens? So basically, the equivalent way to say that is, what's your revenue per kilowatt using the best ASIC? And so I charted this when I was looking at like the cores for the mining versus HPC, and it was super high early on, and then it starts, it goes up with each bubble, or it goes up, not each bubble, but each bull run, and it comes down, and then so over time,
it slipped there, huh? Yeah.
Over time, it's been trending like down, like to the point where you're not going to make like 20 cents a kilowatt hour anymore. Whereas back in the day, I think you were making like over $1 or like 80 cents or something. Like you could have plugged it in, to your house, like your normal power, and you wouldn't be making a lot of money.
Yeah.
So that type of thing, I think that's an interesting way to look at it. And I think that sort of proves that the industry is very competitive. Like if each kilowatt can't earn as much money mining Bitcoin because there's so many kilowatts doing it now, and they compete with each other.
Yeah.
Whereas the early days, it was sort of like whoever could get an ASIC was printing money. Like I remember the butterfly ASIC. Do you remember that?
I was not around them.
I didn't order them, but like it was like, it was like one of the first ASICs or whatever. And like, if you did the math on it, it's like, it makes like, I don't know how much dollars a day, but it only costs this, and you'll make your money back whenever. And so that was sort of like preceded the first hash rate explosion. And then there was another hash rate explosion, like the 2019 bear market, which was like, must have been brutal. I wasn't a miner back then. I didn't know any miners back then. But just looking at the numbers, like I imagine it was a very difficult time. So sorry for the long-winded answer, but
no, it's great.
But revenue per kilowatt hour of like whatever the best ASIC is, or even like you can even do it for like the year-old ASIC or whatever. That's been trending down, even though it's still like rides the waves. So it's been getting more competitive. Forgot the second part of your question.
Just more metrics that you found interesting as you were getting into the industry.
Sure. So
hash rev and then ASIC.
So then, in order to that's the revenue side is your like number of kilowatts times the joules per terahash. That gives you the hash rate, and how much hash rate earns you. The cost side is like, how much does it cost for your energy? How much does it cost for your overhead? And then how much hash rate are you producing? And then you get the opposite of hash revenue, which is hash cost. So like per terahash per second per day. So you have some hash rate per day. How much is it costing you just to keep that work, just to produce that work? And it's really nice to have that metric, because you can just say, what's your hash price minus what's your hash cost? And that's your like hash profit. So I'm making $10 per petahash per second per day. And I have 1,000 petahash. You can say how much money you're going to make a day. So from like using those metrics, it's like becomes very easy to do things. Whereas if you're just like, so a company mines at 50K per Bitcoin in Q3, what are they going to make in Q4? It's like, well, how do I know how many Bitcoin they're going to mine in Q4? I don't know that. And what's their cost going to be? I don't know that, because their cost is going to stay fixed in theory, but the amount of Bitcoin they mine will go down. So it's like their cost per coin should go. Like, I'd rather just say, here's how much, it costs them to do work. And then here's how much work is going to pay them. I think it's very easy that way. And none of the It's not a very common thing. Just recently, some miners have put in their like direct hash cost.
Yeah.
So that's just their cost of energy for their hash rate. But none of them do like the total all-in cash hash cost, or take all the costs divided by your like average hash rate per day. And
what you're describing is normal business accounting, right? Like
I don't know.
Take the hash out of most things, and you're just saying revenue minus expenses equals
if you consider a petahash per second, if you consider that like a unit, like a widget, it would be a petahash per second, like an ongoing petahash per second. If you consider that like a widget in a factory, then it would be this would be the most similar analog. It would be like, what's my cost per widget?
No, the problem gets to one thing we mentioned at the beginning, which is like these Bitcoin miners have sort of been in a amazing position if you're in Wall Street, where no one understands or is going to take the time to understand what's happening. And so they've taken advantage of that to some degree.
It's like selling lottery. It's an incredible position.
Yeah.
Because it's just like proxy to Bitcoin, a leveraged Bitcoin exposure. Like if Bitcoin goes up, they make way more. It's like options on Bitcoin. And like we mined so many Bitcoin before, and our cost per coin is so much lower than the actual price of Bitcoin. Like it's just so easy to make it seem very, very good. I'm not saying it's bad. I'm just saying it's really easy to like only weigh the upside things and sort of sweep the real like costs or context, to sweep the real context under the rug.
Yeah.
Like sure, you had 50K or 30K per Bitcoin, but like why is that always going up? Why is the cost per Bitcoin always going up? I don't know. Or like maybe it's worth mentioning that you'll never see that lower cost of Bitcoin again. Like it's never going to happen. Maybe you should use a different metric that like makes it more understandable. I mean, the thing that gets swept under the rug is that network hash rate grows exponentially. That's if you break it down to everything, it's really easy to ignore that what network hash rate does to the metrics of mining, to like what you make as profit and what you make as revenue. And all the miners are able to just ignore that because people don't really understand it and nobody asks about it and nobody digs in.
And it's in the banking analyst stuff too, right? Like they just don't.
So I think they do understand it to some extent, but they seem to always lowball what it's going to be. Like they sort of think, well, the last couple months hash rate has been growing at this, so maybe it'll just do that forever. But
why do you think that is?
I don't know. I really don't know. I mean, you could just look at the chart of hash rate. You have to use a log scale. Otherwise, like you need a screen that goes up to the moon. But it grows exponentially, and there's very good reasons why it grows exponentially. It's not. And I don't think those reasons are going to go away.
Okay. Yeah, no, it's odd. So the other thing I was going to say with it is like, it's not just the Bitcoin mining industrial complex hiding information because they're in a privileged position, which it's a good thing, right? There's a reason we have a podcast about this topic, is because it's interesting, it's complex, and there's money here. But the other part of it is like every single Bitcoin miner is different. And so it can be hard to measure them against each other. And you had a nice line when we were walking over here, like you don't look at every Bitcoin miner in isolation. You look at them in context to their peers. Like that's how you sort of measure them. And I might be misquoting you, so feel free to correct me. I do like that line as I remember it though, because when we think of a Clean Spark, when we think of a Riot, when we think of an Iron, they all have different strategies, and some of them are completely pivoting away from Bitcoin mining at this point. I mean, like if this Hut 8 news is true, this $12 billion data campus that they're building out, and I have no reason to believe it's not true, they might not be a Bitcoin miner in 5 years. That's a huge data campus for AI HPC. Maybe they have some small stuff, but I think like the class of 20 to 25 publicly listed companies that a lot of people are invested in and we care about so much, and like you've certainly spent the last 18 months kind of whittling away at and learning more about, is going to change a lot. So when you're looking at like this class of Bitcoin miners and all the various things that they're working on, all the various business lines, how do you as an analyst, an independent analyst, come to grapple with them? Like what are some metrics that you've come to use for someone who's doing HPC, but is also mining Bitcoin, or someone who's just a pure play Bitcoin miner, or whatever is under the sun?
So now we're straying away from like theoretical, like pure play hash rate, which is the stuff we were just talking about. and more like a holistic, what is a whole Bitcoin miner worth?
Yeah.
And that's extremely difficult to answer. It's like the quality of their megawatts, the likelihood of them getting a deal for HPC. And but one way you can try to do it is you say, how much is a megawatt worth if you hash on it? If you buy ASICs and you mine Bitcoin on it, and like every 2 or 3 years you buy the newer ASICs to refresh them and whatever. By the way, that's earlier we were talking about network hash rate being the thing that's hidden. Not only do they earn less Bitcoin, but they have to buy new ASICs every few years to stay competitive. So there's a huge ongoing CapEx cost just perpetually. And that's the thing that sort of gets swept under the rug. It gets swept under in terms of like, well, it's year over year hash rate growth, or it's whatever, or it's after this will look great, but don't worry about 3 or 4 years from now. So anyway, you have the what's a megawatt worth if you mine on it and you refresh every 3 years or something, and you can crunch the numbers on that and get some sort of like rough idea, or you can get a historical idea for certain. And then you have a megawatt if you do HPC co-location. Like, in the primary data we have to go off of right now is the Core Scientific deal. And I don't have the numbers in front of me, but I think it's like 18 cents a kilowatt hour they're making in revenue or something, or that could be the net profit overall. And to put that in context, I think like an S21 running right now is like 12 cents a kilowatt hour, maybe something like that.
And declining all the time.
Declining. Yeah. I think we're headed towards like a 4 or 5% difficulty adjustment.
Yeah.
And declining, but Bitcoin could double, and that number will double. It'll go to 20 cents. Yeah. But in 3 years from now, what's that number going to be?
Yeah.
Like when network hash rate is double,
Yeah.
So then you have to buy, instead of the S21, you have to buy the S23 or whatever it is, right? So the question is 1 megawatt of mining, you make some amount that fluctuates based on Bitcoin, and you have some idea of what it takes to make, to get to 20 cents a kilowatt hour, Bitcoin has to go here and hash rate has to be here. And you can sort of do all sorts of things, but you can have some idea of what it's going to be. Or 1 megawatt of HPC, and maybe it's just a flat 16 cents a kilowatt hour, and you don't have to pay for new ASICs every single year and blah, 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 blah. So you can compare those two, and then you can sort of say, all right, I'm willing to pay, a 12x multiple on the profit of HPC because it's like steady or whatever. And I'm willing to pay like a whatever X multiple on the hash rate because it can have really large upside, but also I have this perpetual CapEx and I need to sort of take that into account. And I think the multiple for the fixed higher revenue should be higher than the other one. So that's one way to do it, but it's hard to like pin a value on a miner, like everything combined, if they don't have HPC deals already, or you don't know what the likelihood of them getting those megawatts signed is, or can they expand and buy new sites and do HPC there? So I like to think of them relative to each other, where sort of some of them can have the same exposure. So Iron could do HPC and maybe CleanSpark could do HPC. Maybe. They don't really talk about it much.
Yeah.
They see more value in mining right now, I think. But if I have to pay the same amount for hash rate, so like if it's whatever, $70 million per exahash for CleanSpark and $70 million per exahash of Iron, which one should I buy? I should buy the one that has the lower hash cost. I should buy the one that's going to make more money with the same amount of hash rate.
Mm-hmm.
If we're judging them on how much do I have to pay per hash rate, I'd rather buy the one that makes more money per hash rate.
Yeah.
So that's, one way to value them is relative to one another. And, this assumes that they have equal upside to everything else, which is not even necessarily true, but because there's the whole HODL versus non-HODL question. So it's extremely complicated, and it's just like really hard to like pinpoint like an exact value on a miner. But I think sometimes it's easy to say if one is cheaper than the other. Or
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers. Of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
I get those texts all the time. What Bitcoin miner should I buy right now? And that's obviously Mining Mafia is like, that's basically the whole point of the community is like,
That's a whole,
which is awesome.
that's a whole other level too. Like
Yeah.
which stock should you like? That's
Yeah.
not about what company's going to make more money.
Yeah.
It's about like what are other people going to want to buy? That's like what the question is. And sometimes that's related to which one makes more money. And sometimes it's related to which one has more hash rate or which one has better margins or which one has more HODL or which one has more HPC. Like that's like a whole other level of
the
thinking
narrative
about it.
game there, right?
It's not only narrative, but it's also, is the market receptive to that narrative?
Yeah.
Does the market buy into it or not? And so
Yeah.
it's a whole other set of questions than like raw analysis.
How do you get frustrated ever that like there's a separation there between those two things?
It's part of the game.
Yeah.
I mean, that's where alpha is.
Yeah.
I do wish that they were just all trading at like the same,
Yeah.
some sort of like way that made perfect sense.
Yeah.
Like roughly the same multiple on their hash rate if you adjust it for their hash costs or something like but there's just so many factors at this point that it's too difficult.
It's incredibly difficult. Mara put out like 2 weeks ago, maybe longer as of time of recording, that they were going to buy more Bitcoin with a convertible note. They've done a few of these, and I expected the share price to go down, and it went right up. And maybe it's just because I'm outside the loop, but at a certain point I'm like, okay, how much dilution can you do? Obviously, like there's good ways of doing dilution that makes sense. And I'm not super versed in how the convertible node structure stuff works, but at a certain point, you'd think that there would be some intuition to the whole game, but it's a euphoric market, and it's a bigger market, especially with power markets involved. Like the fact that these things have gigawatts of power in their pipeline, like even we mentioned Bitfarms at the top. I think they're close to a gigawatt in power in their pipeline, and they're not even a miner that JP Morgan's covering.
So I do think Bitfarms is underrated.
Yeah.
Pretty dramatically.
Yeah.
They have some of the lowest, like their cost per kilowatt is among the lowest of all the big ones, or some of the big ones, among the lowest.
Yeah.
So, and if you remember the equation, it's like kilowatts times your, ASICs you put on there, that's your cost. So to me, it's very important that you have if you think about it in terms of like cars or something, it's like your cost of gasoline, which is your energy, times your miles per gallon, which is like how good your car is. And that's how many, how much you can drive, your distance you can go or something, right?
Yeah.
So Bitfarms, to put it that way, has a low cost per kilowatt hour. They have a low cost of gasoline. So if they buy a lot of really good cars, they should have really low cost overall for their hash rate.
Yeah. And they bought a bunch of T21s at pretty good. I don't know what the cost is now, but just looking at the metric for ASIC costs, I think the purchase order was pretty solid.
Was it like 17 or 18 something?
Yeah. You would know more because you're actually looking at the numbers, but I'm just thinking.
It's hard to track all the purchase orders and when the deliveries are and the prices. Yeah. It's like, there's like so much. And ultimately the market doesn't care about it's like the market doesn't care about how much money they have to spend for things. It's really weird.
Yeah.
It's really strange.
What does the market care about?
We're raising $500 million to buy Bitcoin.
Yes.
And so if you want to talk about the MicroStrategy playbook, the thing there is you raise some money at a higher valuation. So like the conversion price. If my stock is $10 a share and I issue convertible notes, they're going to convert at $15 a share.
Yeah.
So they'll dilute me by whatever amount, but it's at a higher share price. So you'd be happy with that. I take that money up front and I buy Bitcoin, and then I say, look, my Bitcoin per fully diluted share went up. Obviously it would, because I'm pretending like the convertible notes are going to convert at $15 a share. It's like doing this. We have a $500 million ATM, but we're going to sell it. We're going to fill that ATM all at once at $15 a share instead of $10 a share. That's kind of like what a convertible note is.
Okay.
But the catch is, if our share price doesn't get to $15 at some date, we have to pay the money back. That's the catch. So it's like you're like taking the money of dilution up front and then hoping your share price gets there so you can just issue shares. But if it doesn't get there, you have to pay the shares back. You have to pay the cash back. So that's what it is. So of course it looks good when you dilute at a higher price than what you are now and use that money to buy an asset. Of course, you could use that money to buy anything and you'll have a positive yield on it. Your per share of whatever. You can buy more. Like your dollars per share just went up if you do the same math. Like you know, it's not creating value out of nowhere. It's just the way you're looking at it sort of ignores the one aspect of it, which is your share price might not go up 50%, and then you're going to have to pay back the cash. So anyway, we talked about that because like, what does the market care about? Well, it turns out the market likes that a lot, and they like when you take the cash and you buy Bitcoin.
To like a 2.3x premium on MicroStrategy. I don't know what it is for Mara and them. The JP Morgan report put out at 2x on the HODL.
Right. And
which is different. But
it's interesting because they don't really justify why. It's just sort of like, well, that's how the market values MicroStrategy. So, you know, anyone that has Bitcoin on their balance sheet will, you know, value it at double.
Yeah.
So if you care about what JP Morgan, how they value your company, you know, buy a lot of Bitcoin.
People do. I've heard.
Buy a lot of Bitcoin and you'll double, you know, you basically get a 2x return on it immediately in all your reports. But that's only if, you know, they're covered by the same people or whatever.
That's true. And there's a lot out there. No, the convertible
that's sort of the thing is like, you can't just buy something and it's worth double just because you bought it. Like, how does that make sense?
How do you think they're coming to that? Is it just lazy or do you think they're just picking up on something?
No, it's just because that's how people value MicroStrategy.
Yeah.
Because, and I have the same question for MicroStrategy, like why would it be worth double? But it's worked in the past. I mean, if you, it's a whole other question. Some answers to that are because they'll make money from Bitcoin in the future, or Bitcoin. You know, you're just so certain Bitcoin's going to go up. So it's
that
really
seems
tricky.
like
it's sort of like a self-fulfilling prophecy. Basically, it's a self-fulfilling prophecy.
But the game has to end at some point, and maybe like one of those convertible notes doesn't hit, and then you have a bunch of debt on your hands. Essentially,
it's sort of like you might want to value them at double the amount of Bitcoin, double the value of Bitcoin, because they're going to continually do the strategy. And as long as the strategy works, you know, the Bitcoin should go up. And for MicroStrategy, the strategy works because of a lot of volatility. They trade at like a 2x beta, roughly, something like that. And so they can raise more money and they can buy Bitcoin. So it's not unreasonable to assume they're going to get more Bitcoin in the future. And if you think Bitcoin's going to go, it's not unreasonable to value them at 2x, but it can work the other way around where if volatility starts to go down or Bitcoin starts to go down, you can't really assume they're going to sell more convertible notes, and you can't really assume you should value it at 2x. And so the premium can just go away.
Yeah.
And then the whole thing sort of goes the other way around where it's like less volatility, less convertible notes, less Bitcoin in the future, less Bitcoin per share yield because the convertible notes won't actually convert.
Yeah.
So you'll have to pay back the cash. So I think it can go in the other way. Maybe it's only for brief periods or whatever, but I'd rather just own Bitcoin. And
so that would be,
I'd rather own twice as much Bitcoin than one, you know, whatever it is right now.
Or own Bitcoin responsibly. So I have two questions about that. Like, you're not necessarily foretelling or foreseeing a unwinding event of these convertible note structures, unless like one of the convertible notes doesn't hit and then you just have a bunch of debt on your hands.
There won't be any unwinding or liquidation. Like they're all well capitalized.
Yeah.
Like MicroStrategy has enough Bitcoin to pay back all the convertible notes. Bitcoin would have to go down to like 20,000. I don't know what a lot of people know the numbers. I don't know what it would be.
Yeah.
It'd have to be some really low number to where they can't afford to pay back the notes.
Yes.
And even then they could just issue more shares and sell it to the public. I mean, their stock would be in the shitter. Like they wouldn't be trading at a 2x NAV, or they'd be trading at like 1x or a discount.
Yeah.
But there's no liquidation there. And same will be true for like Mara and all those guys. Like, but what would happen is you lose that multiple on it. So if you're no longer 2x your HODL, you're 1x, that the only way that makes sense is your share price goes down a lot. Like if you had $1 billion and it used to count as $2 billion in shares, then now it goes down to $1 billion. You lose $1 billion of your market cap. So
okay, thanks for clearing that up. So like as of time of recording, we have 3 miners, I believe, who've implemented this strategy.
Mara, Riot, and who else?
CleanSpark, but they didn't do the Bitcoin. They bought.
Oh, you mean the strategy of convertible notes?
Notes.
Oh no, it's more than that.
Okay.
Coors did convertible notes.
TeraWulf too.
TeraWolf
right?
did, so TeraWolf and Iron did convertible and CleanSpark.
Yes.
So there's ones with capped calls. So those are TeraWolf, CleanSpark, and Iron. They did the capped. Wolf was the first to do it.
And explain the cap call part.
So the capped call part, as I understand it, is, let's say if you're trading at $10 a share, you get convertible notes that will convert to shares at $15 a share. The cap calls basically mean the company gets the value of the shares in cash when they convert, so that they could just buy back those shares immediately. So there's zero dilution. Okay. And it's up to some certain price. And the way you do that is you have like some bespoke contract with I don't know who does this, some sort of bank.
If you're listening to this, let us know.
Maybe someone with who actually has the share, like has exposure to the shares from the convertible notes.
Okay.
But basically, if the notes were to convert, there would be zero dilution because like you'd get the money to buy the shares back up to some certain price. So if my share price is $10 a share now, I say, hey, you got to give me, you got to give me enough money to buy shares back up to $20 a share.
Yeah.
And then you do the convertible notes. And if we play it out to the future where my share price is like 18 or 19 or $20, the notes convert and the note holders get a bunch of shares, but you give me a bunch of money and I buy the shares back. So It works out, no dilution. Okay. So that's the capped call structure.
And that was TeraWolf, Irene, and...
Iron. TeraWolf, Iron, and...
It's their fault for changing names. So I got to say it.
I don't think they were ever Irene, though.
I know. It was Iris, and
Iris,
now it's Irene, and I always just say Irene, but it's just me.
Okay.
And then who else was that?
It was Wolf, Iron, and then CleanSpark. They probably issued an announcement like right now. I don't know, because they were doing it. They were getting priced Friday. Today, I think.
Yes.
So they said they're going to do cap calls when they do the initial offering. They say, "Hey, we're going to offer it, and we're going to offer it." And then there's a process where it gets like priced through, some intermediary says, "Hey, CleanSpark wants to do convertible notes. You interested in buying?" And you're interested in buying. They get a lot of interest, and then on that some day they all agree on what the price is, or they agree on the terms, and then all the people that are going to buy the convertible notes want to put their hedges in place. So usually on that day it goes down a lot. I don't know if you know about how they hedge, but for like you buy the convertible notes and you have exposure to, you sort of like have a call option. If the share price gets, you can get a bunch of shares at $15 a share, for example. So what you often do is you short some amount of shares so that you're sort of like equal in both.
Gotcha. Okay. And they go down after hours on that one, or
because as the people buy the convertible notes, or as they find out how many convertible notes they're going to get, I don't know exactly how it works, but as the convertible notes are issued to people, they want to have a short position to sort of hedge against it.
Gotcha.
And then they can make money from just the share price moving up and down.
Okay.
Through like, it's a little comcomplicated, but this is the MicroStrategy playbook, by the way. This is, why people buy their notes. They make money from the volatility. You hear sellers talking about how we sell the volatility and we make money from that. So they sell the volatility to the note holders. They buy the notes. They short some amount of shares, but they change the amount of shares they short over time such that they can't really lose money as long as there's volatility.
It's the
easiest way to explain it.
No, that was a great explanation. It's honestly one of the best I've heard to date. The wild thing about this is how far the conversation from the beginning has gone from understanding ASICs to what we're discussing now. And I think that's the crazy thing, just looking back on this market, is like, how sophisticated do you have to be to play in the Bitcoin mining stock landscape? I mean, you can certainly just buy something. You can buy We Gonna Make It ETF, ride with it.
I think that's a really good thing to talk about. So I think, like I was saying, you have like the actual metrics of miners, but then you have like, what will the market want to buy? And how's the market going to want? So I think I think you're right. The way I would think about it is like there's a mid curve of understanding,
and
right?
We're sitting on it on this podcast. You're definitely on the right side's a good side.
Right curve, maybe I don't know, but you can argue that the right curve should do what the mid curve does. So that's going to be my point. Is you sort of have who's behind buying, like bidding these prices up and down. What's their extent of knowledge of these stocks or whatever. And I think for Bitcoin mining, I think it's fairly like mid curve or lower curve. Like in terms of how much do they understand about the industry and about things. I think it's like mid to lower curve. If you compared it to something like, I don't know, oil production, or just pick like some other industry. Like I can't think of any other
Oil's
industry.
a good one. I mean,
can't
like
think of any other industry. Car manufacturing or
that's comparative to this one, or just
like
in
retail.
general?
It doesn't even matter. But like, okay, retail. Let's say like there's a bunch of people that like to buy Target and Walmart and things like that. The mid curve there is probably very knowledgeable about how those, like what metrics matter to those businesses and, you know, how to value them. It's probably like, cause there's so much money going into them and like the analysts on them are just like, so they understand everything that matters. Like same store sales is trending this and their e-commerce is doing this. And like, it's not like people like, I like Walmart. I like the things they sell. So I want to buy the stock.
Yeah.
But like for Bitcoin miners, like I like Bitcoin. They make Bitcoin. So I want to buy the stock. Or like, I like Bitcoin. They're buying more Bitcoin, so I want to buy the stock.
Or I like their mascot. I like the rhino, or
I like the rhino, or
the pig.
I like that they, you know, their exahash per second, exahash went up year over year by so much. That means they're doing awesome, I guess.
Yeah.
So I think the level of understanding for the investor base of Bitcoin miners is lower than for other industries. If you say, how much do you know about the industry? I think it's lower. So then the question is, how do you play that? You know, do you just play it like, oh, they say they're buying more Bitcoin, so I think that the people that invest in it are going to like that, so I should buy it.
Yes.
So that's like a meta level question.
And then there gets into this convertible note game.
The convertible note, it's confusing, but
And then
they're
the
buying
HODL
more.
game.
They're buying more Bitcoin. They have a Bitcoin per share yield.
Yeah.
Yeah, and HODL, they have a huge HODL. If
And then
Bitcoin goes
there's
up, their share goes up.
Energy pipeline. And then there's
Yeah, there's a
AI
lot of
HPC.
megawatts. Yeah.
So many different narratives that collapse in on these things, yet persistent over time, we do see movement. So I would say the three that stand out to me: Riot losing position over the last few years, CleanSpark gaining position over the last few years, and Bitdeer gaining position over the last few years.
There's going to be a lot more flips too. I mean, what about Iron?
Yeah. Honestly, I should have included them as well.
I think they flipped a few.
Mm-hmm.
And I don't know. What's the question?
There's not really a question as much as like,
I don't know what explains it. I mean, so Riot, maybe it wasn't. So Riot had some performance problems.
Certainly.
And I think their costs were really high, and questionably some costs weren't included in their Bitcoin mining segment. I think they were put into hosting.
Yes.
But I don't know if that's why their stock went down. Maybe their stock went down because their exahash per second wasn't going up.
Or their mascot is not as cool as everyone else's.
Sure. It could just be something so simple, and that's why. So like maybe nobody cared about their costs or anything. It's just, their hash rate wasn't going up. Or their Bitcoin, the amount of Bitcoin they mined every month went down a little bit. So that's why. It could have just been something like that. And same thing for CleanSpark. Well, their hash rate was low, but now it's super, like this was earlier in this year, I guess.
Yes. Yeah.
Up to about March, I think.
Yeah.
There was one very specific day where they peaked.
Do you remember that day for every good reason?
I think it was a Friday. There was something filed on a Friday before the weekend.
Gotcha.
About a sale of stock.
Gotcha.
Preceding a ATM announcement.
Yes.
Anyway, CleanSpark had a similar story. You know, very few exahash, and then it went up a ton, and then their share price took off in early this year, I guess. So I don't know what's behind every little thing. For Bitdeer, in my mind, it's like, well, they're becoming actually vertically integrated. They're making the mining machines. And back to the like early fundamental points is, you know, your costs are your cost of your power, and then you have to have ASICs, and then that gets you hash rate. What if you as a company pay way less for your ASICs than everyone else? What does that mean?
Or you preloaded your costs into R&D and kept plowing into
it. Or you
can
get the best ASICs anytime you want. Like you can get them fast.
Tether is one of your giant note holders.
Sure.
That doesn't hurt either.
Sure. So that could be behind it. I mean, they also have a very big power pipeline.
Yes.
I don't know, what their HPC prospects on a lot of them are. I'm sure that like a couple of their sites are probably good.
Yeah.
But in my head, it's a lot of it has to do with the ASIC story.
Yeah.
But it could also have to do with the HPC story. I don't know you have to ask the people that are bidding it up so much.
I'm glad you're talking about HPC because it's almost blasphemous. I didn't put cores into that list earlier as well.
Cores is sort of like the stable coin amongst miners now at this point. Is what it feels like.
Yeah.
They have some mining exposure. I think, if Bitcoin goes up 5%, they maybe go up like 1 or 2% or something.
Mm-hmm.
I think it's reasonable because in like a year or two, all their money, like a ton of their money is going to come from HPC deals. But I still feel like, I don't know. Well, I'm waiting for the next announcement, next new customer, new megawatts.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
These miners move over time. We can look at an isolated moment and be like, why did it change week over week, day over day? But like over an extended timeline, like it's somewhat clear to me looking at headlines why Riot has not performed as well. And it's more clear to me why other ones have. I shouldn't just call it Riot like that. That's unprofessional of me. But I think like we can look at these headlines and say like these things move for reasons over an extended period of time.
Well, we should be, to be fair to Riot,
yes,
they've had a nice last couple of weeks.
Yes,
so they're getting the recognition.
This activist investor.
Who is the activist investor?
The Starboard or whatever. Yeah.
I was saying like a few months ago, like,
yeah,
they can spend a lot of money to fix things. Like they should be looking better as they build out Corsicana. It'll like lower their costs across the board for everything. And it's going to be new hash rate, whatever. So
yes,
it's not a problem that money can't fix in their case.
Yeah. I mean, they have tons of cash. They have an awesome pipeline. They're very secure in Texas with the new administration. They're laughing all the way to the bank. And I think their shareholders will be happy one day.
Well, you're saying,
but I am
share
saying,
prices
like,
move over time and you have some idea why.
And yeah, you can take a look at these things and understand why. But in the intraday volatility of these things, you can get lost in the sauce, as it were.
Definitely.
It can be very difficult to understand why these things happen.
It can sort of be like, you know, some miner makes an announcement that we bought a bunch of Bitcoin. And you're like, oh, it went up 5%. Okay, who's going to buy all the Bitcoin next? Let me buy that stuff. And like, then I don't know. It's just, it's really hard. The volatility is crazy and the narrative changed so quickly. Like, think of all the convertible notes in the last like 2 weeks.
I know.
Before it was ATMs.
Think of all the news in the last 2 weeks.
It was ATMs. So it was ATMs before, and then it got to the point where like people are like, hey, wait a second. Every time there's an ATM, that means they're going to dilute more, and that sucks.
Yeah.
And so every time there's an ATM, the stock went down like 8%, 10%, 7%. And then the companies started like, oh, how about convertible notes?
Yeah.
We can buy Bitcoin with the money.
Yeah.
You like that? And then it's like, oh, okay. You know, the first day you announce the convertible notes, that kind of sucks because, you know, it goes down a little bit. But then once you announce the Bitcoin you buy, it goes up a lot. So seems like people are more receptive to that. And now all the miners did that in the last like couple of weeks. So I find it interesting and amusing, and it makes sense. If I had to predict something, it would be, okay, it might take a couple of years to play out, but like, okay, how did the miners do with the money they got from convertible notes, and how did that work out? And then maybe in like 2 or 3 years, convertible notes will be like, oh no, last time you did that, it didn't work out so well.
So like where are we going next with this market? Some like really deep thoughts on it, like far out, is Bitcoin miners become banks. A lot of them have like a lot of Bitcoin on their balance sheet. Bitcoin keeps becoming this, you know, huge asset they can use as lending vehicles for loans and things like that, monetize it that way. And I'm thinking like really far out where this becomes a boring market. How do you want to see the space progress? If you were going to talk to a banking analyst or an executive or that Twitter account that is really just doing a great job right now, how would you like to talk to them? Say, focus on these metrics.
I think right now the sort of narratives come from the top.
Yeah.
And the metrics come from the top. Sort of like what management wants to talk about goes down to sell-side analysts and whoever else. And that makes its way down to investors and sort of hobbyist analysts. So, you know, like cost per coin is a big one, and year-over-year exahash growth. I think it needs to sort of become more mature and look at the metrics that matter more. Like,
yeah,
if I had to choose, I think it would be like cost per kilowatt hour, your direct energy costs and also your overhead costs on a kilowatt hour basis. Like, what are they going to be? So we're talking about like, you take your kilowatts, you put ASICs on top and you get, your hash rate. So I want to know what that base level, like your cost of gasoline or your cost of, I want to know what that is. I think that's very important. And then I think sort of hash cost is important too. So like, all right, you have your cost of gasoline and you have your current ASICs. What's that amount to in terms of your cost per hash rate? So I think that's a crucial metric, and both in terms of like your direct energy costs and including your overhead costs, like whatever your costs are. I think those should become like the prime focus of metrics that matter in terms of pure play mining. And it's pretty similar for HPC. It's just sort of like, what's your cost per kilowatt hour and what do you make per kilowatt hour doing HPC?
Yeah.
So hopefully as the industry matures, like that's what becomes like a better point of focus, I think. And also like sort of hash rate growth is the other part of the equation, because the higher hash rate goes, the lower hash price goes, just assuming everything stays equal. So that's the other, it just decays endlessly.
Yeah.
But I mean, hash cost decays as well because you get more efficient ASICs.
Yes.
The one thing that's constant is your cost per kilowatt hour, which I think is why it should be like super important. It's harder to fix. You can't just buy new ASICs to fix that.
Yeah.
So yeah, I think hash cost would be great to see. The cost of ASICs is a big one. Network hash rate is a big one. Like I think these are the primary concerns of like pure play mining. But right now, it works the other way around, where it's sort of management says what's important. It's cost per coin and this, and our cost per coin is going to go down with our new ASICs or whatever, and it's sort of like sweeping some other things under the rug. So I think in some other industries, it's sort of the analysts and the management are aligned, where it's sort of like, well, we want to see your same store sales, or we want to see this or this or this, and those have come into alignment. But I think in Bitcoin, it's so new. It's sort of like whatever management says, oh, I guess that's what we should be paying attention to. I guess that's what we should be tracking. So I think that's why it's been an interesting space for a while. And but hopefully in the future, it's more like mature and sort of, it's all like one math equation. I mean, it's just like you have energy.
Yeah.
You buy ASICs, you convert the energy to Bitcoin. Like it's not, there's little things in between, like uptime, that and how true are you to like, when you make promises, do you deliver? Like when you say you have growth targets, do you deliver? Can you get their ASICs online and stuff? But other than that, it's like a pure math type of thing.
Bitcoin Twitter is one of my favorite places because it is one of the simplest things, right? Like the math is all there. Just in regular Bitcoin stuff, 21 million, all that's pretty simple.
21 million. And then just how much Bitcoin do you make for your hash rate? That's like known second to second.
And it's like,
because you have a public ledger that shows you how much Bitcoin you're making every time.
And it's computers at the end of the day, like this is not SpaceX. This is not unknown unknowns.
Right.
Unless you're talking about Bitcoin development, which is a whole other podcast we have. But I do agree with you. It's funny how we've been missing these metrics. What do you think happens over the next few years with these metrics? And before I ask that question, and maybe this kind of leads into it, is why do you think these metrics are wrong now? Is it because of the sell side stuff that you've mentioned earlier, or?
So I think it's because management.
It's just management.
The companies who want you to buy their shares because they're.
Why doesn't Wall Street know that? Or they don't care?
Well, I think they do know it, but maybe it's too hard to convince to their audience. Maybe too hard to explain to their audience what hash price is.
Yeah.
Or maybe it's too hard to explain, direct cost, and then you put ASICs on top, and that's your hash price. And then, whoa, what does hash price mean? Blah, blah, blah. It's like, that could be not intuitive and hard to explain. It's super intuitive to say, here's the cost per coin, and then you go look up what Bitcoin is, and we think they're going to mine this amount of Bitcoin. Like that's much easier to understand.
Yeah.
But it just sweeps everything else under the rug. It like sweeps all the confusing stuff away. Like you don't think about it. Like, or, oh, don't worry, we factor that in, because we think exahash will grow 110 exahash a year, which is just, that was in the JPM thing, which I don't know how they came to that, but that's just crazy. So I don't know. I don't know the answer. It's like, either people have to get wise to how Bitcoin mining works. There's like no way around it. You have to know what network hash rate is. You have to know like why it goes up and why it will go up exponentially, what affects it. And then you just have to know those things because that's how the protocol works. Like you have to know what the how Bitcoin mining works. It's like it's not as simple as gold mining. It's not like you have a reserve and you dig into it, and it's different than that. It's sort of like mining for gold, except the amount of gold you find depends on what everyone else in the world is doing when they mine their gold, like, which is kind of strange.
It's super strange. What do you think JP Morgan, because we're using that reference a lot, or any of these other banking analysts are going to care about in 5 years? So we're past this cycle.
Sure. I think it's going to be mostly like HPC.
Yeah.
I think it's, how many megawatts do you have and how much money you're making? I think it'll just be dollars per kilowatt hour. I think it'll just come down to that.
Yeah.
Like dollars per kilowatt hour on the mining side, dollars per kilowatt hour on the mining side, dollars per kilowatt hour on the HPC side, and how much of each one are they going to have in the future?
Completely commoditized. No,
it should be.
Yeah.
I mean, it's just energy into dollars.
Yeah.
And then the way you do it is either mining or HPC or something else or whatever.
Okay.
Maybe there'll be something past HPC. I don't know.
Yeah. Aliens like in New Jersey right now.
Sure.
Energy.
Maybe drone charging stations will be like the new thing.
We'll find something else to talk about in the mining pod. I was talking with someone earlier today about this becoming the AI infrastructure podcast, which is probably the most boring part of AI, but the most important part of AI. It's expensive to build these sites. Penny, this has been great. Thank you so much for joining. We hope to have you on again soon, in person again, perhaps. And then of course, whenever you're free. So thanks for joining to you.
Thank you. It's been fun.